first of all, thank you very much for the feedback from the last session. So one of the most important things we heard was that you wanted to get much more feedback from the people that were going to be relevant to your domain. So that's why we've invited Katie to be here tonight. She hasn't actually arrived yet, but when she does, I'll introduce her, and you'll get a sense of how she fits into the program. She's specifically somebody who invests in climate tech and, for example, energy tech and impact investing and a lot of the deep tech that you all were interested in. In fact, when I did the word cloud of this, that was so loud and clear what you wanted that's why we decided we should change the guests up and get Katie in. So that was the first thing I heard from you. The second thing I heard from you, which was great feedback, was that you really need to be able to get more of a sense of what the emerging path is for VCs. So it's all great that I'm bringing on these guests who've been doing VC for 10, 20, 30 years or whatever it is. You wanted to understand what's it going to be like for you as an emerging VC. How do you find your pathway on, which of course is the whole goal of this program. So I reached out to Adam Dawkins, and he runs literally the Emerging Venture Capital Association. So he's kind of like your guide into what that world is like. And obviously, this is just the beginning of a connection that you can make with him. Tonight is not the be-all and end-all answer to your questions. It's the beginning of a relationship that you can connect with him and other emerging venture capitalists, understand that journey. So it should be a full session. But in the usual form, I don't want to start with anything other than a chance for you to get to spend some time together as a team. So I'm going to introduce Annie, and she's going to kick off the first exercise, and then I'll jump in.
Hi everyone, I'm an RC helping run these sessions. Our first exercise is going to be a little icebreaker for the table to get to know each other. So we want you to come up with a team name. An icebreaker that I think can help with this is what is something that you have in common that's like the strangest thing that you all have in common. So I'm co-opting this for my section that did something similar, but just like talk amongst yourselves about interests. It can be related to VC, it can be related to hobbies, whatever you want. Just as a way to get to know each other. I think we'll be in these groupings during this session definitely, and probably during the final session. So just to get to know each other.
Okay, have fun for a few minutes and then we'll join again. All right, well, the great news is everybody's found a name. The bad news is I probably can't pronounce half of them. Sriracha, I think I can get that. The OC, No Friends, Little Princess, Ping Pong Piano Players, love it. No idea where that came from. We've got to hear that later. Love is Blind and Empanada Capital. Very cool. All right, we're going to have some fun tonight. Based on those names, lots of potential. So let me jump straight to what we're going to do this evening, which is focus on helping you build an investment thesis. So the first exercise that I want you to get engaged in is, as your team, figuring out why are you doing this? And I'll give you the obvious, which is we're doing it to help you get a job in VC. We want to help you get the experience that you're going to have when you start interviewing, which is to need to be able to explain why are you interested in VC? What are examples of things that you're engaging with? What are opportunities you see out there? And rather than just have a blank slate, having a thesis and having developed that and understood what it is that you think is an opportunity that somebody might invest in is a great basis to get a job. I'm lucky enough to have one of my partners here, Lily, who, if you raise your hand, Lily came through this exact process as a student prior at Harvard when she interviewed with us. So you can talk to her about this. She came in, and instead of just having endless interviews with her, we said, so Lily, tell us what you have in the way of a thesis for some area. We didn't tell her what area. She went away, developed it. She came back. She brought a whole series of companies back in a market map for us. Then she selected 3, which is what you're going to do too. And then we said, which one would you put your money in? So we only gave her 1. You're going to get to 3. And here's the fun story. Well, she's obviously on our team, so how did she get there? I'll tell you. The thesis was so good, the 3 companies were great, and then she picked the exact company that we wanted to invest in, and we'd never even biased her on that. So anyway, that's hopefully the kind of experience you're going to have, and have fun talking to Lily about it this evening in your groups. So off you go. First off, workshop 1 will go till 6, so we've taken a bit of time on the naming, but jump in on why have a thesis? You know, what do you need it for? What are the different types of audiences for a thesis? What purpose might your thesis serve for each of them, for each of those audiences? And then what is your idea of an investment thesis, and what elements do you think will be in it? So it's really those things. Why have a thesis, and then what should be in the thesis? And I'll walk around and help you. Lily will, Sue will, and obviously anyone who wants to raise their hand and just say, hey, I'm stuck. Where do we go from here? Jump in. But I only want to take like 10, 15 minutes on this, so don't think too hard. Just start putting some things down on the board, and then we'll do what we did last time, which is bring them back together for us all to learn. Great, have fun. I've got a very, very good team that's volunteered to speak up with their examples. So if you all want to grab your seats, I'm going to ask Team Rapunzel to lead us off and tell us what it is that you've decided is the why and who the audience is.
So for our why have a thesis, we said first is to just broadly develop a perspective for an industry, a space, and to think about the needs in the space. And then also very importantly, as just a signal to founders, future investors and LPs, and even employers of not only your VC, but also your future portfolio companies that you're focused on this space, and to just establish yourself in a particular industry where your thesis is based in. And also just to narrow down your focus and prioritize your resources to be singularly focused on whatever project that you're working on. And then the second piece, I think it was like, what were the elements? We thought about the importance of understanding the market size, potential macro trends and growth opportunities, as well as just making sure to have, as part of the thesis, kind of a visualizable action plan for how you're going to achieve it.
So the core elements of a thesis, like if you're selecting an industry, I guess you need to know what's the market size, what's the segment you're focusing on, and what's the growth size of that segment in the short term at least.
Yep.
And then the macro trends that can affect the segment size and the growth. It could be also like the competitor landscape as well, like the current companies in the segment as well. So I thought those are the core elements.
Great. Well, you got a lot of the elements out, so thank you very much, Team Rapunzel. I think that was excellent. Anybody else want to jump in now? I'll offer a volunteer or I'll grab somebody. I've seen some excellent boards, so. How about the ping? Yep, you volunteered. Perfect. Ping pong piano players. Let's get you a microphone.
Thanks. Just something that that is kind of separate from what they mostly comprehensively mentioned is it just kind of shows focus for if we go into an interview process, for example, they'll probably ask us, hey, what are you interested in? So if you kind of have a sector or a couple of sectors that you've kind of done some work in, then you can speak directly to that. And then to add on to that, maybe a lot of teams might have various headcount on specific sectors. So if you can add like differentiated value in an area that like maybe they would like to invest in cybersecurity or something, but they don't have the headcount doing that, then you could maybe slot in that area if your thesis is relevant.
So what I heard there was really interesting, and I don't even have a column for this, but I think it's great. What you're really saying is, look, in your interview, if you can come back with something that's differentiated in your viewpoint on a sector that's going to give that firm a sense that, hey, you're going to add value and you're going to be able to find investments they wouldn't otherwise see, of course they're going to be very interested in you. So that's a great thought. Thank you, Julius. So Julius's point, by the way, is an example of what I hope you'll all think about. It's like, how are you going to distinguish yourself in the interview? Because everybody who approaches that VC is going to come in with the same, resume of all the credibility they've got. But what makes you stand out? So I think that was an excellent point. All right, let's give one more team a chance. Let's see. The OC, you guys did a very good job from a blank sheet, and you were initially questioning whether you could. So the first thing I heard you say was set a scope. Why don't you explain to us what you meant by that?
Yeah, obviously there's going to be a lot of opportunities coming inbound, and you have to understand like what's the scope of opportunities that you want to evaluate, whether that's like a specific industry or a specific I don't know, like type of founder or something like that, just to be mindful of the bandwidth that you have.
You just revealed my secret question right off the bat. So I had this question mark in the middle here as to what might be something that would be absolutely applicable across any sector, any market, etc. And you just hit the nail on the head. It's the people element. And you hit it on the head by saying, what kind of founder? And that is a critical part of trying to figure out what should be your investment thesis. Because if you remember last session, we talked a lot about what you have to do, which is figure out what kind of founders you want to back. And even if they're outside of your thesis, if you can find an excellent founder who, for whatever reason, has the attributes that you want to back, then that's an incredibly important part of the thesis. So thank you very much, Kat. That was absolutely excellent. So let me do the following. I'm going to wrap up here with this section and say that we've covered a lot of the key things that I wanted to make sure you got a handle on, which is, why you have a thesis is because you really want to make sure you've got clarity of what you're focusing on in what markets. And when you get into markets, there's a lot of things you raise. Like, it's not just a market, it's the segments, it's the size of them, what kind of companies should you cover. We typically, when we talk about markets here and we start talking about companies, we talk about a market map. So your thesis should have a market map. It should cover the various different companies in those sectors that you're interested in. And then what industries, of course, that they're in as well. So I'm actually going to put up the reason why we brought Katie today, which is that you were very clear in what it was that you were looking for in your feedback to us, which is, this was literally exercise 1. The industries you were interested in were clean tech, deep tech, energy, climate tech. Do these sound familiar, Katie? Nothing you invest in, right? Nothing. So with that, let me have Katie come up and join us to talk a little bit about how does she figure out how, for example, to invest in those markets that you're interested in. So far, nobody has mentioned technologies in the thesis. So did any of the teams have technology or a part of technology in your thesis, or why you would be doing a thesis? Yeah, Kinu?
Yeah, we talked about technologies as maybe an emerging trend or a dynamic that could create an industry, or at least enable kind of a certain need to emerge or to be met over the coming years. So,
actually, you said 2 very important things there, emerging trends and also emerging needs. So lots of you, when you were answering the first exercise as to what you were interested in, said things like you were interested in data or AI/ML or things that would be breakthrough in DevOps or all these other technologies. So your thesis, if you have interest in that, should start to identify those things that you think are new breakthroughs, things that have, like Web3, that have emerged that might be changing the game, or new technologies for materials, for example, if you're interested in how you might make breakthroughs in applying those in all sorts of fields, from health tech and onwards. And then beyond the technology trends, what needs are evolving in these markets? Because as technologies change and we get used to new ways of doing things, for example, to state the obvious, you all have phones today, so that totally changes your ability to bank. It also changes the way you buy or the way you get mobility. I mean, so many things are changed by that one thing, which is obviously the way the world went mobile, that if you can identify those things in advance and you can start to think about, well, what would that open up in terms of new market opportunities or new sectors? That's a great basis to start thinking about your thesis. Okay, one last thing before we sit down. Did anybody talk about business models? Being at HBS, I would be surprised if somebody hadn't thought about business models for the thesis. No? Oh, you did. Great.
Yeah, we talked about business models. I think one that I've heard of a lot is asset light versus being heavier asset.
Great.
And then similarly, we also talked about boundaries and maybe like, are there certain capabilities that kind of end up being a red flag if a business has or decides to develop strategically?
So boundaries being things that you wouldn't want to invest in.
Yeah, or just guardrails on like kind of like, are there any business models that are off the table or
Great.
Ones that we don't want to pursue?
And Anna, what I love about that is you'll find when you get into VC that the biggest challenge is figuring out where you don't want to spend your time, because there's so many things that come across your desk. So all the things that you can clarify right up front and say, I don't want to spend time in these areas because they're asset heavy, for argument's sake, or they're B2C and we're only going to focus on B2B. So that's one of the things that I encourage you all to think about. A lot of you, if I brought up the same trend, you can see in the middle actually, consumer is right in the middle there. So should that be part of your thesis? Like if you're a consumer investor versus a B2B investor? I think so. So B2B is one segment, B2B to C is another, and then consumer is another. And they're very different kinds of investing, both in terms of the way you go after those customers and understand what their needs are in these markets and how you will access them. So I'm going to summarize this with a simple diagram for you. A really good thesis will have at least these 3 elements. It'll have this market that you've decided you want to go after. So for example, somebody mentioned cyber. If you're going to go after cyber, that's a very viable market. It's actually a huge part of where, for example, a lot of money's been made. It'll have very clearly probably a technology either emerging or breakthrough that's completely disrupting an industry or an opportunity, opening up new opportunities. And then it'll have a business model associated with it. And if you can find something with your thesis that opens up a new market with a breakthrough technology and has a game-changing business model, you're probably about to identify something where somebody could make a lot of money. That's where some of the sort of sweet spots of the investing world come from. It doesn't have to be that. I mean, sometimes you get complete breakthroughs like Airbnb just because of a business model. But it happens to be asset light, to your point, Anna. And that asset light business model totally changed the game for everybody who was traveling, because they didn't have to now book hotels. And for people who used to build hotels, now they're being competed for with people who've already got properties all over the world. So business models, technologies, and markets are a great basis to think about your thesis. So now, questions before I go any further about, do you now know where you should at least start thinking about what categories might go into your thesis? And do you have any questions on that? Which I'd love to pose to Katie too. Yeah, Sarah.
I just have a question on how narrow versus broad should it be? So like, let's say healthcare is the category. Do you need to choose a specific niche within that? And like how narrow should we think about?
Like services are really different than molecule development, right? I think you have to, I don't know, can I answer this?
Of course, yeah, jump in.
Yeah. So I think there are healthcare investors that are doing services, right? That are web-enabled or something like that. And then there are people that are doing truly biological discovery, so often new medications or things like that. And then there's even another category, which is like, how does technology change how we do molecule discovery or something like that? All three of those are really different and require really different understanding of how to get to market. So that's as different as B2B, B2B2C, and C. And so I think some healthcare VCs will go across all three of those, and then you have to explain how you can understand all three of those, and some will go very narrow in one area, you know.
Yeah, so what I loved about Katie's answer is she gave an example of something that could play out any different way. The technology might cause the market to evolve. The way you get to market might require a different business model. And so this intersection is intentionally for you to think about. So that's why this thesis is such an important thing to develop as, and I would say you answered it very well, as narrowly as possible to start off with, because that makes it very easy for you to go all the way back to the question that was being raised over here, to get focus on something. If your thesis is so broad, then everything's going to fit it, and you're going to spend all day long trying to figure out how do you filter and where do you spend your time. Any more questions before I jump to spending
Michael,
time with
can I
Katie?
just add one more thing there?
Of course.
Also, you're always selling if you're the general partner, you're selling your limited partners. So they're asking the question, what's your competitive advantage, right? And so if your thesis is super broad, you tend to have proven that you're really good at this and have deal flow. And you tend to start narrow when you first go out and prove like, I am the best at this. And you have some evidence of that, right? So it's like, also how do you get into business? I think is, Now, I hope you were all born billionaires because you could just get into business today. But the rest of us, yeah.
So thank you for raising that, Katie, because one of the important things we didn't get to, but now you're touching on it, is it's very important as a thesis for you to be able to explain to the people you're raising money from, your LPs, where it is that you fit. And the reason is they don't want to just put money all over the map. They will choose asset managers or money managers, as they'll think of you, that do early stage biotech, for example, or late stage, industrial, or whatever it might be. So you being able to describe, as Katie said, a finite, narrow, well-partitioned area that you're investing in helps them allocate their dollars. It helps them build their portfolio. And their portfolio, I can tell you, is not all weighted to one asset class, as they would say. They want it in various different areas because they want balance across it. That's how investors at the LP level think. They want their portfolio of VCs that they have balance across industries and across markets and across stages. Does that make sense? The only thing we didn't cover, and maybe I could ask Katie this, Is there another category, Katie, of people that, for example, I'm thinking of the many people that refer us deals all the time, the lawyers, the accountants, et cetera, the service providers, et cetera.
So if they think you're good and they like your thesis, that helps them say yes to your early stage deals. That's one way that I think about it. And then the second way I think about it is like they also have a lot of conflicts with entrepreneurs they represent or other firms they represent that you might be negotiating with. So they're trying to understand, is there really conflict here? I don't know, Michael. I've never really thought about it, but that would be my off-the-cuff answer.
No, I think that's great. So you're going to want to help your companies when you're a VC, and we talked about this last session, in the phase of building their business. And so you want to get the best service providers around them, whether that's the banks or the accountants or that's the recruiters, which are critical in this. They also need to know, well, what business are you in? I mean, if they don't understand, for example, that you're in the deep tech world versus the software world, they'll send you completely the wrong candidates and they won't know how to engage with you. And obviously those firms also specialize too. So your middle column there is, think about it as service providers, but I also use one other word up the top there, which is referrers. An enormous amount of deal flow comes through those places. So we get an amazing amount of deal flow from, for example, the lawyers, because a lot of founders go to the lawyers first, actually, usually to protect their IP, because that's what they're worried about, but often just to figure out how to start their business. And so if the lawyers know what your thesis is, and they can say, oh, I know I should go over to Kinu because Kinu's focused on B2B SaaS in the late stage, and that's who my founder is here that I'm working with, they'll introduce them to you. So you're putting up the lighthouse effectively for people to come into port by defining your thesis closely. Great. All right, we covered all the bases there. Thank you, Katie, for jumping in. One more question in the back? Yeah.
When we kind of, with regards especially to where we are probably in this recruiting cycle and such, when we're putting together the thesis, I wonder how deep we should also go with kind of individual companies. Like we can know everything about an industry, but should we then, I see companies on the board, but should we know everything about their business model, like their competitive strategy and stuff, and all of the players? Because I feel like that's kind of a different type of diligence. So we'd love your thoughts.
Let me let Katie answer that. How deep would you want somebody to go in a thesis to be able to identify a company that you should pay attention to?
What relationship am I into them? Or am I hiring you to be at my firm? Are you at your own firm and I'm trying to decide to do a deal with you? Like, what do you mean by recruiting cycle? Yeah.
I would say more from the perspective of an MBA candidate
At a
trying
firm.
to become a VC.
Yeah. I would want to go pretty deep. I mean, I want to know your level of curiosity. So I'm assessing how fast are you going to learn? And therefore, I'm going to assess, and how self-motivated are you? So if you don't know a lot about an area, then, and you don't have to know a lot about a lot of areas, but maybe a few where you could really get strategic about, like, how is this industry going to change? So back to Michael's, how is this market evolving? What technologies are coming out? What are the different business models? What do you think is going to win or not win? You don't have to be right, but often what we do is debate these things. So just seeing how you think is really important to me. Yeah.
So I think we had this last time too. I think you're hearing from Katie very much about how you approach this with great curiosity, and your willingness to go deep to understand and bring a point of view is super critical. And then when you do, of course, you're adding value. Whereas if you come in paper thin and you've got 100 ideas about 100 things, it really doesn't help. Yeah. Good question, Julius. Yeah, go ahead. Akram.
So speaking about debating, it made me wondering about how iterative and dynamic is actually the investment thesis. Would you say that over time you've developed a thesis, you know a market, and then you start looking into the companies, and then actually maybe there is not that many opportunities, and then you go back, you change the investment thesis, or maybe there is M&A happening in the industry, and then there is not that many players happening? Would you say that it changes over time, or it's actually kind of more rigid?
So I think it really depends on your firm. Like in the firm that I run, we essentially invest in heavy IQ and IP. So bleeding edge technology newest kind of areas of technology in a whole bunch of different areas. Like we cross climate, health, advanced systems, which includes like AI and all that stuff. So we're very broad, and what we call the mythical fourth bucket, like who knows what's next. So for us, we are mapping so many different areas all the time because we're really mapping the universe of the very best research in the world and research breakthroughs. So for us, that map is quite dynamic because our thesis is really narrow in some ways. Like we back the breakthroughs, which will be the technologies of tomorrow that will then blossom 1,000 companies. So that's where our thesis is developed. So mine is quite dynamic, but other people who are betting on like a trend of like, everything's going to move to the cloud, or everything is going to, be done in healthcare as a service, right? Like those are, if that starts to not play out as a thesis, you are definitely shifting to another one. And you see firms do all this all the time, like, oh, we started in ML, but now we're doing, I don't know, something totally different because they think that has run out of steam or it's overhyped. And so they are drifting to a new thesis. And LPs love and hate that when you drift to a new thesis. Sometimes they love it because they think you're smart, and sometimes they're like, whoa, you guys are just chasing. Obviously, you don't have good deal flow. So I think the narrower you are and the more firmly you really understand the dynamics, the more you're convincing both people to give you money, people to join your firm, and entrepreneurs to take your money.
So, Akram, one of the things I want to do is thank you for bringing up that question, because it highlighted something that we also talked about last week, and now we have a term for it, the mythical fourth bucket. I love it. So the fourth bucket, you actually heard it last time. Kent was admitting that the last thing you want to do is be locked into your thesis. And the mythical fourth bucket is related to this whole question of people. If an amazing founder walks through the door, and I sent you the article, thank you, Sue, for pulling it out, that talked about this, everybody's thesis goes out the window. It's like George Foreman said, you have a plan until you get punched in the nose. I mean, this is what happens. You get punched in the nose by a founder that comes through the door so amazing, you go, oh my God, I never even thought about investing in this area, but you are such a great founder. You have all the attributes that we look for, which is a whole nother workshop we could do. We should invest in you. You're somebody who we should back because you're going to figure out what market to go after with what technologies and how to build a business model around it. And you heard him tell that story of him backing somebody exactly that way. So now we have a label for it, the mythical fourth bucket. Since Anna, go ahead.
My question is just kind of from the perspective of someone who's potentially applying from the MBA to join a VC firm. In my thesis, to what extent would you want me to reflect, say, current market conditions? So to what extent can I take like a long-term view saying, oh, like I want to bet on digital health, versus to what extent should I say like, wow, that's actually like very overvalued now, and maybe a lot of people have invested in that space, so maybe I'll pick something a little bit more timely. Like it's kind of a question like long-term versus short-term.
I mean, listen, this is all taste. My taste would be, I want somebody who has a long-term view, who understands how things shift and change, and they can talk about very short-term things right now, but like I'm investing in things that are going to be big markets 10 years out. So anybody who's like, oh, well, we have this moment, climate is hot. And I'm like, okay, who cares? Like, honestly, that's so short-term thinking. But if you're working for a crossover fund and want to go to public markets very quickly, short-term might matter there. But for me, it's much longer term. So I think it depends on what kind of firm you want to go after and how they think of it, right? So it's very stage related to me. Like seed and early stage venture is very long-term thinking. And the closer you are to public markets or in public markets, it's not that it's short-term thinking always, but that plays a much bigger role there. So be prepared to do both, right? But also be careful with your short-term thinking. Like, I don't think you often make a lot of friends that way, with like very quick, analysis rather than the deep long-term stuff. I think always shows better to more people because the quick quips about what's happening today are throwaways.
Yeah, they're almost, you could read them in the newspaper, so what value are you adding? Yeah. And I think Katie's framework is a good one, which is if you're thinking about early stage investing, which is where 85% of you are, then definitely a long-term thesis. And here's why. A company on average takes 7 to 10 years to get to a stage where it's got critical mass to either go public or get acquired or be considered something that is really valuable. So if you're investing here, you better have a vision for how it's going to become big there, which is not short-term thinking. So that's a lot of, again, hopefully what you can incorporate into your thesis. You believe these trends are leading to this market opportunity where you can see this kind of company being successful or this kind of founder being successful. Great. Yep, go ahead. Eric.
Should you include like the average ticket size in your thesis or not?
I mean, if you can. I think that's understanding the stage that you invest in, and then are you collaborative or are you trying to take the whole deal, right? So your ticket size will shift based on that. So if Michael and I each have a fund that we say, we love a co-investor on the seed or the A, then your ticket size is going to shrink and your ownership is going to shrink, but then you have more resiliency in your collaboration. So I think it depends on how you want to play, right? So my specific one is, hey, we want to make sure that there's a strong governance structure. We want to have a strong early position and make sure that we help shape these companies through the B round to be like highly investable by the B round by lots of other firms. Happy to always co-invest with anybody along the way as long as they have the same vision we do. If our visions aren't the same, then I think probably best to wait to collaborate later. That's how I think of it. But everybody plays this game a little bit differently,
Okay, other questions for Katie? Yeah, go ahead.
Markets, technologies, and business models, they're very, reading a lot of investment theses online, they all seem to kind of be like a little similar, especially when you hit on the big 3 buckets of market, technologies, and business models. How do you make yours unique compared to everyone else?
I start always with what is my reason to exist, right? The reason for the engine to exist is there was a gap in the market, which then I said, if I fill this gap, that unlocks a whole set of important businesses that could become very large industry leaders globally. So my reason for existence was lack of capital in a market. So that's how I build my and then I say, okay, I have a unique structure and business model that unlocks that with this partnership that I have with MIT, and that therefore makes this possible. So that's how I build it, but it really depends on what's your reason for existence. And it's shocking to me, okay, go to the Valley, there are 2,200 seed funds. There aren't that many entrepreneurs, but somehow, if you got enough capital sloshing around a system, that just keeps going. And so then you overbloom early stage seed capital. LPs are very aware of that, but there's this kind of FOMO bubble thing that happens. So I always just start with the basics. What would HBS teach you? What's the reason? Why are you going to garner money versus somebody else? And it should be that there's a market need, right? So you're going to see a lot of low outcome seed funds in consumer because there are too many of them. There just will be. And lots of people, it's their own money and they're willing to lose it. They don't care. It's fun to play the game. But if you're talking about institutional capital, then you really need to build, why is another one needed? Why is it needed with your exact thesis? And that, I think, is always the fundamentals that really works. Ours is university-based research. We are in the highest density of great breakthrough research in the world. We are providing lab space that people need that reduces the cost of bringing these things to market. We have this partnership to do that. Like, it all makes sense, and it's very differentiated, right? So it's easy for me to, now I have to convince people that these are the right technologies and I've placed the right bets. That's the problem with raising the successive funds. But that's the work of the GP from there. But the central thesis, I think, is very strong and differentiated. But, what is your thesis? What is your differentiation?
So you just teed up the exact thing I want you to work on in the workshop. So turn your board around, write your names again and your team names so we don't lose track of you. And now pick one thesis. And it can't be obviously all of you deciding that you're going to each do your thesis. So across the team, just pick one of your theses that you'd like to develop. So I'll remind you in the first exercise when you were giving us feedback about what you want to do, each of you had an idea that you were interested in climate tech, or you were interested in AI ML, or you were interested in consumer, or whatever it was you were interested in. Just pick one of those as a group and start developing your thesis. And do exactly what Katie just said. Start with, why could you do something that is unique and differentiated and compelling that would cause LPs to say, oh my gosh, we'd want to give that firm money. Or if you were joining a fund, they could say, wow, if Anna's coming to me with that thesis, then I want her on my team because she's going to build on what we're trying to do. And that's going to make you very attractive as a potential hire. All right, so we'll spend 10 minutes doing that. Have some fun. There are three things I noticed. So I want to just pull them out because they were just patterns going around the room listening to everybody. This broad versus narrow question came up 3 times. Sounds like it might have for you too. So I've got a simple approach that I think might be easiest for you to get a grasp on. It needs to be broad enough that you could build a portfolio in it. So if it's so narrow you can only find one company in it, that's not going to help you. So even this exercise, we're saying to you, find 3 companies at least that you could invest in. But remember, if you're going to become a VC, over years, you're going to build a portfolio of several investments, say 2 or 3 a year. Over 10 years, it becomes something like, in the 20s or 30s of investments. And so that area that you're mapping out needs to be big enough to support that. It's not to say it has to be off the bat that way, but it might evolve that way. So think about it in that sense. The second thing I heard a lot of, which was great, was what is it that you need to do to bring together this market, tech, and business model? I just want to make sure I blow this away. I always worry about putting anything on the board because then you all think it's like, oh, that's the answer. There are no answers in VC. Sometimes people come in with no market well-defined, no technology breakthrough, and no business model. But as I said, they've got a conviction that there's something they understand uniquely well as a founder that needs to be addressed. It might be just a need, literally as basic as that. So for example, if you thought about what was going on in the world 10 years ago in B2B tech, it was a huge challenge to run data centers. And there was no such thing as cloud computing. And the first breakthrough was made by somebody who realized the need. They needed to take server utilization from in the low teens to the high 80s. And that was virtualization. That gave rise to VMware. That gave rise to cloud computing. It gave rise to everything we now take for granted. But nobody had identified that market. There wasn't a market for virtualization. It didn't exist. It was just somebody recognized that basic need to increase utilization in data centers. So don't get stuck on this. Recognize that, again, there's always this mythical fourth bucket, which is people who are smart enough to identify needs. You can always invest in that. But even in that case, and this was the last question, you should be able to articulate enough about why you think you could run alongside that founder, not be completely blindsided when they say server utilization. You don't know what that is. If you're going to be in B2B tech, you need to know that. So it's also, to Katie's point, got to be something you personally can relate to. You can say, okay, and I got this question over there. If you don't know anything about it, you have no idea, you've got to get smart on it, smart enough that you could identify when somebody walks through your door with a potential opportunity to build a business, that there's room for that. And that therefore you would like to follow that, you'd like to do the diligence on it, etc. So those are the 3 takeaways I got. All right, let's jump in. So love is blind. You want to share what you're trying to build a thesis around? I know it's directly related to Katie, so. And it's not dating. Guess what?
It's not even dating. It's awesome.
So I think it's a trend that a couple of other groups wrote about, but we were specifically looking at climate tech, and within climate tech, we were looking at natural resources and mining. So one of the big trends that's going to have to occur as we decarbonize the economy is kind of this juxtaposition almost of having to open hundreds of additional mines all over the world. So in order to actually get the critical materials needed to build electric vehicles, solar panels, wind turbines, you're going to need a lot more lithium, iron, aluminum, rare earths, cobalt, zinc, those types of materials. But mining and taking natural resources are very carbon heavy. So our thesis was around how do you create an ecosystem or a portfolio around sustainable mining. So everything from electrified mining equipment and haulers to carbon capture technology at mining sites, carbon accounting software looking at scope 1 through 3 emissions, BMW case, AI, machine learning applications, looking at everything from exploration all the way through separation, refining, metallizing, and then magnetizing in some cases. So our business model was essentially B2B for the most part, and then why now? Because you have spiking demand, you have actual policy dollars, so CHIPS Act, Infrastructure Act, Inflation Reduction Act, and then consumer, government, and firm demand to actually electrify the economy.
Well, first of all, hats off for pulling all that together in a short amount of time. Katie, what do you think of that?
I mean, it's an area I work in a lot. So I think the question is, at what stage are you working? I mean, if I look at this, I'm like, okay, a lot of people have not this exact thesis, but something, there'd be a lot of overlapping investments. So is it that you believe there isn't technology out there today? Do you believe other people aren't investing in it? Is this the are you in the growth stage of it? Are you, I would want to know more than that.
I think one, there are some companies that are starting to look into this space, but I think it's going to take significantly more investment. So Climate Tech DC has a newsletter, people who aren't aware, and they specifically had a newsletter on natural resources in mining, where they talked about 2 or 3 companies in some of these areas. So specifically, there is an electric mining hauler company that's doing a collab with GM. But I think in order to actually hit the scale that we're talking about, it's, and it's not just haulers, but it's also looking at the batteries, it's looking at the motors, it's looking at the magnets. I guess I would think in terms of series, it probably depends. Everything from C to Series A to, if you're talking about electric dump trucks, right? And GM decides to build dump trucks, or whoever, that'd probably be later stage. In terms of capital, though, I think it's going to require a significant amount more capital beyond what's already been invested.
Yeah, and then the other thing is anything in mining has this huge geopolitical layer. So I'd kind of want to know what your thesis is there. I mean, China is basically buying up all the natural resources they can buy up. So what is it in your thesis that would allow you to win against that? I mean, I play in this space, so I know a lot about it.
So what you're hearing, though, is great feedback, right? So you're hearing the important thing you need to do is make sure that you've got clarity around what's the white space you found, the hole in the market, the gap, the something that's differentiated. It's back to why will you have a room to invest that hasn't been identified before. And I should have done this earlier, so shame on me. We did talk a little bit about this last time, but your strategy should always include stage. So any VC is always going to be very quickly asked by LPs, what stage do you invest? And you need to be crisp about it. Even if you decide one of your strategies is you're going to be full life cycle, that's a strategy. But then it's very specifically defined as we will start at the beginning and invest all the way through. By the way, it's less and less the case these days. But anyway, stage is critical, domain is critical, and sometimes geography is too. And if you read that article that's up on the site in the workbooks, you'll see that sometimes people will also react against all of that as well and say, it doesn't matter if you find through some breakthrough technology or some gap in the market. It's possibly true, but you still have to figure out how you're going to fit your investment dollars and put them to work in a portfolio. All right, great job. Thank you very much. One more, which is the Team Rapunzel, I think, is working in the climate tech space too.
To start with, we first investigated why now, why it's the right time to invest in climate space, and we found two reasons. First, there's a lot of capital flowing into the space, which is more like a short-term view, but also in the long term, given there's huge evidence that temperatures are rising, and all the private companies, especially, should now go under energy transition. The pressure is increasing, so in the long term as well, it's gonna be a major trend for private companies to decarbonize their whole value chain. And in terms of the focus areas, similarly, actually, we started with mining, oil and gas, heavy companies, and then we didn't want to be too specific, so we ended up with energy efficiency across the supply chain, that's applicable to many industries. So it's kind of like a plug and play solution maybe that could address a certain part of the value chain that's applicable to many industries and decrease the carbon emissions in that particular area. And the potential companies, I'm not quite familiar with, but Farm Energy is doing a cost-effective battery storage solution. So that's one company example that we can give. And also, I know, for instance, in mining, there is one startup that's focusing on how to get most out of the mining waste so that they don't further need to do mining operation. They can just leverage the waste from mining to create value. So that those two would be the two example companies.
Great.
And early stage as well.
Great. Katie, thoughts on that?
Yeah, I mean, I've talked to this team. I think, again, huge, wide open area. So what's the stage? Why do we need your capital now? What's the expertise? I think would be an interesting place to continue to explore. But I certainly think there is massive opportunity in this whole energy transition and all the mitigation needs that we're going to need. Because of climate change. And so, I like your thesis. Yeah.
Great. One of the things, by the way, to highlight that I know Katie's firm is particularly good at is just one word, which is timing. Because the biggest challenge for investors is if you time the market too early and you spend 10 years in the research phase, and you can't get beyond that to actually commercialize something, it's really tough to be a successful investor. So the reason the engine exists, maybe you could just give a little bit of background, is tough tech does take time.
Yeah, I think the way we see it is there's a lot that should be done in labs and in universities or in R&D settings. But once you've kind of proven out most of your scientific risk and then you're an engineering risk, then it is probably time to begin the commercialization process. And so that's kind of our thesis is keep the true science risk in the lab, but start to break it out when you see a market that you could develop and a technology that could get to market within, really you'd have to take out most of the technical risk in the first 5 years, right? So that you have another 3 to 7 years to cross over to being a potentially scaled company. But that's our, we went to our LPs with that thesis and were able to say, hey, you have to lengthen the time a little bit because it unlocks these huge opportunities. You have a lot of other investors who think much shorter term, they won't see these opportunities, but you will get paid back for taking that risk because you might be able to unlock many $100 billion, $1 trillion companies if you do that. So that was what I sold to the investors. That's a very specific thesis with a longer time frame. So my fund is 12 years with 2-3 year almost automatic extensions. So that's up to 18 years. That's quite significantly different than most funds. Now, when you talk to LPs, they kind of say yeah, but every fund we know comes for 1 million extensions. So you're really not that different. Thanks for being honest, but you're really not that different from the rest. But it allowed us to unlock longer term thinking, which I think was the most important part of the thesis and being upfront about that.
So it's a perfect way to say, we're very lucky to have Katie here because it's a very specific kind of investing and a lot of you seem to want to do it. There are a lot of you who are interested in this thesis area. So thank you for joining us, Katie, sharing your expertise. And I encourage you, those of you who are continuing to find interest in this, go look at the Engine website, go check out the kind of thesis that Katie's developed there, go look at the kind of projects she's investing in, go think about these timescales, go think about how could you be differentiated and unique both by stage, obviously, and also in the specific segments you'd go after, and then figure out how you might approach it in terms of developing your portfolio and the way you would pitch yourself as somebody who brings something unique to the table. So thank you very much, Katie.
Can I give one specific
Please do.
Data point? So the Office of Science and Technology, which is OSTP, put out a report recently for climate. I don't know if you've read it. You're John shaking his head. And essentially mapped out what we will need to do for the energy transition. Then go look at the Engine portfolio. We've been doing this for many years, and you will literally see almost a one-to-one map of everything we've invested into. But you also could look at what are the most important technologies for US security, long-term economic security. We're almost to one there too. So but that is a very specific thesis. So like not everybody's gonna wanna do that, but I think it's a way to unlock what a thesis could look like.
Yeah, perfect example. So again, trying to understand what those market opportunities are, the market needs are from that kind of perspective, and then working backwards the way Katie just took you through is a great way to think about building your thesis. So again, thank you so much, Katie. Wonderful. Really appreciate having you here. All right, so always harder to do this remote, but we're lucky enough to be joined by Adam Dawkins. Again, this was your request to get Adam. Welcome, Adam. Good to have you here. Okay, so what I heard from the students consistently is they're all looking to understand how they get their first job in VC. What's the best way to do that?
So I guess to set the context, I recently launched my own fund about a year ago for early stage fund. I've been in venture for about 6 years now. Venture was my first job out of college. I was at a Bay Area firm for a couple different ones, but most recently for 3.5 years where I focused on one of the areas was hiring. So I would do a lot of these interviews, hiring associate and principal level people for our team. The challenge, the best candidates would always have, some experience with startups from a operating side, even if that's an internship. But, I think some unique expertise into particular markets, or at least curiosity for those markets, is always really important. And then secondly, and really ultimately a network, an established network. For most, entry level roles, even up to principal, sourcing is a very heavy component. And so anyone can read funding announcements and go to events, but a really unique differentiated network is something that is a compelling way to find a venture role. And then in terms of actually going about networking with existing investors and building relationships, it's uncovering with whatever, swim lane or channel that you go after from, an interest standpoint, finding investors that invest in that area, and then reaching out to them and periodically connecting and thinking about what are their pain points or how do you add value to them. Some of them, may want help diligencing companies. Some of them may want, to expand their deal flow. And so I think the question always starts with what unique value can you bring, and then working kind of backwards from there.
Questions from the group here for Adam. Yep, go ahead, Keanu.
Just curious if you could talk more about the type of network that you're looking for. So if it's sourcing based, I would assume basically access to founders, but you also touched on a network of investors. So I'd be curious to hear more about that.
With regards to a network of founders, it can be from a few areas. So either university affiliation. So for instance, I was doing a lot of deep tech investing at my prior firm. And CMU in particular, their research labs are very strong in robotics and areas of automation. And so, for instance, if the candidate that was looking for the venture role had that established network with these university labs where kind of deep tech technology is emerging from, that could be one area. you're starting to see a lot of angel groups spin up that are associated with particular late stage in public companies. So like there's a group for Airbnb, former investors. Google has the biggest one. They're called Zoogler. And so that's just simply a network of, hey, I worked at Google. A lot of my smart friends are going and starting companies. That could be a unique source. And then from the investor network standpoint, it's having sharp investors in your network that are willing to share deal flow with you, that will send you stuff that they're actually investing in. I think oftentimes the challenge is, I meet, people from tier 1 firms, but are they actually willing to send me the deals that they're actually doing? So I don't know if that really answers your question well, but that's kind of how I've thought through it.
Just to add to it, one other thing that's super obvious, but you shouldn't ignore this, is creating a thesis doesn't have to be a lonely thing. You can actually go collaborate with other investors on it. You might find like-minded people who are also interested in, pick your area, AI or ML, etc. And you go and develop your thesis in conjunction with them, saying, hey, there are a series of companies I've been looking at. Which have you been looking at? When you create that collaboration, it's going to encourage the kind of sharing of deal flow that we're talking about here, as opposed to being an island. Sue, did you want to add?
Yeah, and just to share it, this is something that Annie, as one of our student advisors, really wanted to help us accomplish in this group itself, is that you guys are the next generation of investors that are going to be joining funds. Hopefully, the people you meet in this room are people that you can work on deals together and share opportunities with. So I think it was really great that Adam shared network of founders that you can access, network of operators that are going to become potential founders, and then network of investors that you can actually get deals through is all like a very powerful network. And it's multi-pronged in how you keep building that out. And to the extent that you've built and invested in building that out as you approach funds, it's even more powerful for you landing your job.
Well, I've got one for you, Adam. So you came from an interesting background. In fact, you might want to share that for a second. What was your own path into VC?
The quick story is my freshman year in college, I went to Texas A&M. I started a media streaming company, essentially enabling the streaming of content from multiple devices to a single feed. For a reason, no one had patented that technology yet, so I patented it. I then sold it to a large public company my sophomore year, sold the IP. And thought, well, the founder side is cool, but what's the other side of the table like? So reached out to my finance department head at A&M and said, I read about a university-run venture fund out of Utah. I think it'd be really cool if A&M had something similar, enabling students to basically manage capital and deploy it into early stage companies. Worked on that for 2.5 years. I was actually going to manage that full time and teach a course on venture capital and private equity. Students within the course would then go on to manage the fund. March of my senior year ended up taking longer than expected to get the final approval. We basically need to carve out capital from our foundation, and that hit a few snags. So they said, go out and find a job. And so it was 2 months before graduating. This was my undergraduate. And so really wanted to get into venture. I thought that if I find a firm that's raising a first-time fund or a follow-on fund, they would likely have the capital and the need to hire someone. So I went on a placement agent website that enabled me to find these firms, cold email like 100, 125 of them, everywhere from Iowa City, Iowa's AgTech fund to New York to SF. I just really wanted to be in venture. After like the 100th and 10th email, no one was really hiring someone with a non-technical degree from Texas A&M out of undergrad. I said, if you aren't willing to hire full-time, would you hire an intern? The third firm I emailed is called Ben Hamu Global Ventures, managed by the former CEO of 3Com and Palm Pilot in Palo Alto. I moved out as just for an internship. I was paid about $1,000 a month. So I couldn't get a apartment because I had an internship, so I could only have temporary housing. So I couch surfed, I watched cats, house sat cats for a while, looking for a full-time job. And ultimately they connected me with a firm that they co-invested with. It was a big accelerator program, but they had a small seed fund with a single GP. So worked there for a year. I worked for a firm called Sierra Ventures for 3 years, and then recently raised about 25 million, 20 for investing for my own fund. So yeah, that's a quick story.
So one of the reasons I wanted Adam on was because I actually would say that's a pretty typical path that people go through. It's really a tough industry sometimes to break through. And it takes that kind of grit to figure your way through it. And so, whether you start as a tech founder and you end up getting all the way through to this point and deciding this is for you is actually a rare thing. A lot of people quit in this process. They don't go through it. What would you do differently, Adam? And for that matter, what are you all thinking that you could learn that you would like to sort of ease your path or to find a better path through? Adam, what would you say you're observing from the sort of beautiful cockpit of seeing all the emerging venture capitalists that are joining your association? What are the tricks? What are the things that people are looking for? What are the things that you would advise this group to do to be more successful finding their way into VC?
Yeah, that's a great question. I think the unfortunate reality is you really do need operating experience to be a good investor. I came from undergrad, so I don't have operating experience. The largest reason for churn that we see, and on average, I'd say, the community I've built, it's 1,350 members, largest community of pre-partners. There's about 25% annual churn that we see from the membership at the pre-partner level. And so the reason is, many of them go on to try to get that operating experience. And sometimes it's voluntary churn, sometimes it's involuntary. But oftentimes either, people that are analysts or associate level have done banking for a couple of years or go directly from undergrad. And so we typically see maybe 15% actually have had real operating experience previously before venture. And so the first part is needing that to excel at your role. The way I've set up my fund is we only follow, and 5 of the 25 I've raised is for operating capital. So we're a little unique in that we've given up a piece of our GP in order to build a platform team, in-house engineers, designers, recruiters, pitch deck designers, developers. And the idea is that I personally don't have experiences, so I should not be sitting on boards and advising companies. I should leave that to the gray-haired, tenured VC. But what I can do is provide very tactical help. And so I think part of it too is just understanding your competency and being really mindful about where the gaps are and what you fall short at. Because if I was setting out to be, a Series A investor, leading rounds, sitting on boards, I would not be suited for that, given my role. And so I think I'm one of the few maybe that can stay in the industry with no operating experience. But all I would say is it's incredibly important to get it if you can.
So if I hear you rightly, it's self-assessment really about where you think you could fit and make a major difference, and be clear about that up front. By the way, I know I made this observation last time, I'm going to make it again, which is there is no such thing as the right answer for this in VC. There are plenty of VCs who've been extremely successful, have zero operating experience, and you saw one last week. But it's sometimes a very much harder road to find your way into VC from the ground up without that operating experience. And I think one of the things you heard, which is really important, is to have some understanding, if not expertise, in startups. So one of the reasons I wanted us to be at the iLab tonight is the iLab, of course, has hundreds of startups and startup teams here. So if you only have to walk across the road to come and find out what's going on in startup world and what it's like to be a startup founder and figure out how you might get to be, for example, ingratiating to them, how you might help them. And a lot of the great projects that we've been able to back out of Harvard actually started exactly that way. They started with some of the MS MBA teams, for example, that wanted to figure out how to get funding. And you could be part of that journey for them. You could help them navigate it. You can help them figure out how to go get their funding, and you can learn what it's like to be a VC without even leaving college. So there's a great journey that you can pursue right here. And thank you, Adam. This has been great. Yes, go ahead.
Thank you. I was wondering about the answer about network, if that would change depending on the stage of investing. Let's say early versus growth. Would you expect a candidate interested by more later stage investing to have a kind of smaller network, not as developed, but a stronger investment thesis, understanding of the market?
So I'd say at the earlier stage, especially seed or pre-seed, you really do need a strong network because these companies are so far undiscovered, and so that's a very much a core competency. I'd say as you go later stage, every firm, at least the growth stage ones, will do a survey of the market and on a weekly, monthly basis see which companies are getting funding, and at the end of the day, that's table stakes. Everyone knows which late stage companies to track, and so I would say the core competency, so to speak, as you move up to larger rounds or later stages, is one, understanding of core business fundamentals. So the really being strong at the numbers and the drivers of growth and what can continue to propel the business. The network is important, but what you alluded to around the thesis development, that's also quite important. So granted, my exposure is only to limits the early stage, so I can really only speak to that better. But I would say at early stage is just simply network. I think that's the core to it. So, and the last thing I'd say, actually, I know you all are short on time, but for a plug for the iLab. So when I was in my first year at venture, the second or third deal I did is a deal called Iterative Scopes. It came out of iLab. If I remember correctly, there was like 300 companies in that batch, and I forget how frequent the batches are. Maybe there's 250. But I've done the exercise since, and there's always at least one company that becomes a unicorn out of that batch. Iterative, I invested at about 8 million cap, and now it's valued at well over a few billion. And so I would suggest definitely spending time in iLab. The exercise of going through 300 companies is very time consuming, and I no longer have that time. But there was a very driven, motivated student at Harvard that reached out to me and said, hey, I filtered the 300 companies or however many and found the top 5, and I work with them and I help them, and here's why you should meet with them. I would be very impressed with that, someone that would take that initiative.
Thank you, Adam. I didn't even ask for that plug. I had no idea he was going to say it, but I do think there's a very, very good point here, which is you're sitting in fertile ground. You literally have the opportunity to figure out how to become a VC right here in your own campus. And so take the opportunity, figure out where it is. And by the way, if you want to go spend some time with MIT or any of the other 70 plus universities in on locus here, I mean, you've got so much opportunity to do this, and some of the greatest innovations are being built in our own backyard here. So this is a great opportunity. Adam, thank you very, very much. Really appreciate you joining us. As I said earlier, I hope you now all feel like you could reach out to Adam, learn more about how you might be part of the EVCA as you become an emerging venture capitalist yourselves, and gain some value from that association. And thanks for getting us going on these questions tonight. All right, we have left a few minutes to close tonight for a couple of reasons. One is we want to have time to get you prepared for the next session. So let me give you a heads up on what that is. Next session, you're actually going to get a chance to come and present your thesis. In fact, if you click in the workbook into sourcing and selecting, which is the next workshop, you will see how we've laid it out. You're going to get a chance to come and talk about one of those 3 companies that you pick and why you picked them from your thesis. And the good news is you're going to get to present to your peers and some more VC guests. And some of the VC guests that we've got lined up are pretty interesting, actually. But anyway, just to give you a sense of this, we will have a template that you can work through. And it's literally in the workbook. And we just ask you to copy it. And Annie, if I may, I've just renamed this for you. So you can be the student X here. So this will be Annie's template. And she can start working on it. And in it are 3 docs. There's the thesis. I've really laid this out. By the way, we don't need you to write a 10-page document here. 1 page, really well thought out the way you were putting out on your board. So you've already started it for a lot of you tonight, where you clearly identify what you believe and some key points in it. A market map. We talked about that tonight. How is it you're going to bound the set of companies that you think might fit within that market area that you're looking at? And then 3 selected companies. And really, we're not that interested in you going deep into those companies when you come back and present, as much as explaining why you chose them. Why did you pick these 3 companies? And then here's the thing that you've heard over and over again, you heard it last time, is extra credit for any of you who actually go out and network and build relationships with one of those companies. Because that will really give you the inside track, and it'll be the basis on which you could come back and talk for real about some of these things as opposed to hypothetically. And I'd be totally fine, by the way, since we've talked about it tonight, if some of those were right off campus and you decided they fit your thesis and you managed to get to know some of the founders and you could learn from them. And actually, to state the obvious, sometimes the best theses aren't going to come from you. They're going to come from you going to this magic element that we talked about, the founder, right in the middle that actually already has the unique set of understanding of the marketplace. And so you can learn tons from just going and finding those great founders. That is a magical way to develop a thesis, is talking to lots of founders in your market space, hearing why it is that they're developing their companies, synthesizing that and bringing that back as the basis for you to say, this is why I think not just one, but multiple companies could be born in this area. That's a fabulous way to develop a thesis. All right, so any questions on that, I will very gladly take in two different opportunities. One is our next AMA is coming up soon. So anybody who wants to come to that, we purposely made it in person because we know that thesis, the whole area of building a thesis can sometimes feel like, yikes, I've got stuck. So great, bring your challenges to the AMA. We'll sit with you. I'll do that in person. It's on the 21st, by the way. And then, of course, there's the AMA online too. So throw your questions in the AMA. You can direct them at individual people, including all the guests that have been there. And we'll welcome you back to do that. So thank you very much. Really appreciate it.